Welcome to your daily 5 minutes market brief with JP Morgan and Luna. Today is August 18th, 2025. I am Luna.
I am JP Morgan.
So let's dive into the last trading day. U.S. equities were a bit of a mixed bag. The Dow nudged up slightly, barely 0.08%. But the S&P 500 and the Nasdaq, they were down about 0.3%, 0.4% respectively.
Okay, so what drove that dip in the broader market?
It looked like mostly profit-taking, especially in tech stocks. Seemed linked to that producer inflation data coming in a little hotter than expected.
A bit of a wobble then. But underneath that, was the market still feeling, well, reasonably okay?
Yeah, actually, that's the interesting part. The overall sentiment, still quite resilient. And it's not just hope. S&P 500 companies, for example, they're showing solid profit growth, like around 11% year over year. Many are even lifting their forecasts.
Okay, so they're looking past the immediate inflation bump.
Seems like it. Maybe betting that Fed easing, rate cuts will help power through these current headwinds. It's a more nuanced picture than just inflation up, stocks down.
Right, and that inflation news plus the Fed expectations must have hit bonds and currencies too.
Definitely. The U.S. 10-year Treasury yield ticked up a bit, reacting to that inflation data, around 4.3%. But, and this is key, markets are still overwhelmingly pricing in a Fed rate cut by the September meeting, like an 85% probability.
85%, that's pretty high conviction.
It is. And because of that expectation for looser money, the U.S. dollar index actually softened a touch, down near 97.8. So for you, the takeaway is investors are strongly betting on borrowing costs coming down soon. Good for certain sectors, obviously.
Okay, and commodities. We saw oil take a dip, WTI.
Right.
Right.
Yeah, WTI crude fell, down about 1% towards $62 a barrel. That was pretty directly tied to the U.S. deciding not to slap tighter sanctions on Russian oil after those Trump-Putin talks. So supply fears eased off a bit.
Which helps with inflation pressures, doesn't it?
Absolutely. Lower oil helps cool headline inflation, takes pressure off consumers and businesses, gives central banks a bit more breathing room. Gold, meanwhile, didn't do much, stayed around 1940. And copper was kind of flat, maybe slightly up, balancing Fed optimism with some caution about China.
What about crypto? Any spillover from the Fed hopes there?
Pretty quiet, actually. But Bitcoin did hover near its recent all-time high, around 124,000, also benefiting from those hopes for easier Fed policy boosting risk assets.
Okay, so a lot of reaction to inflation and Fed whispers.
Yeah.
Any major economic data releases in the last day or so? U.S. was quiet over the weekend, I think.
Yeah, U.S. was quiet. But Japan gave us something interesting. Their Tertiary Industry Activity Index, which tracks the service sector. It bounced back pretty nicely in June, up 0.6% after a drop in May. Beat expectations.
Suggesting maybe some pickup in domestic demand there.
Exactly. Good for Japanese stocks. Minimal global impact directly, but still a positive sign for that region.
Got it. Now, stepping back from the daily numbers, what about the bigger macro picture? Geopolitics seems very active.
Very. We already touched on the oil price slip due to the Russia sanctions news. That's a direct macro impact, helping inflation cool. But also, Russia came out with some really maximalist demands regarding the Ukraine conflict that kind of dash hopes for any quick resolution.
And the market reaction.
Well, defense and aerospace stocks got a boost, especially European defense contractors. The thinking is, sadly, a prolonged conflict looks more likely. Gold also saw a small uptick, that classic safe haven move.
And speaking of Europe and Ukraine, leaders there seem to present a very united front supporting Zelensky.
They did. Talk of Article 5 like security guarantees strong stuff. It reassured markets that Western support isn't wavering. Helps defense stocks again. Basically, it solidified the status quo, which markets had mostly priced in, but it adds a layer of confidence in European political resolve.
Okay, now the big one everyone's waiting for. Fed Chair Powell at Jackson Hole. That's August 21st, right? He sometimes drops hints or bombshells.
He certainly does. And he's got a real tightrope to walk this time. Inflation is still, about 1% over their 2% target, but the job market is cooling off. Like we said, markets are heavily betting on that September cut, 85% probability priced in.
So if he sounds less keen on cutting, that could cause some turbulence.
Oh, absolutely. If he pushes back against those strong easing expectations, if he sounds less dovish than hoped, you could see a sharp reaction in bonds and stocks. It's a high-stakes speech.
Definitely one to watch. Okay, looking just ahead, what's on the immediate calendar, say, for August 19th?
A few things. Tuesday morning, 8:30 a.m. Eastern, we get U.S. building permits for July. Expected roughly flat, around 1.39 million. Any big surprise there could move homebuilder stocks, maybe Treasury yields too.
Then later,
Mid-morning, 11:30 a.m. Eastern, the Atlanta Fed updates its GDPNow estimate for Q3 growth, currently around 2.5%. Could sway those Fed expectations again. And then in the afternoon, 2:09 Eastern, Fed Governor Michelle Bowman is speaking. Investors will be listening closely for any hints on rate policy from her. Her tone matters.
right, so bringing it all together, the big themes are still inflation, interest rates, and geopolitics driving these day-to-day moves.
Precisely. And understanding the why behind it all, why oil moves on diplomacy, why markets hang on Powell's every word, that's what gives you the edge. It helps you anticipate how these shifts might impact your own portfolio.
So the final thought for you. In a world where these big macro winds can change direction so quickly, how are you thinking about positioning for the risks, but also the opportunities ahead? Food for thought. Stay informed, stay strategic.
You've seen the headlines, but what really moves your portfolio? Money.ai scans 1.3 million signals a day, earnings, sentiment, macro shifts, and turns it into one personalized briefing focused on your holdings. No noise, no guesswork, just what matters. Money.ai, know what moves your money.